Tesla is the most exciting automotive company to come out in the last 50 years. They came into a very old industry and really went about it in a very innovative way. First, their cars are all electric, which is great to see. They came out with a lot more technology, including autonomous driving, which could really go somewhere in the future. All in all, this company is one of my favorites to watch. I'm a big fan of the company. I'm a fan of the founder. Just my hats off to the company. Now, being a fan of the company doesn't necessarily mean that I want to be an owner of the stock. I have been an owner of Tesla stock, and I analyzed the company to see if it's a good stock based on the valuation, based on the free cash flows it produces, the earnings per share. And I wanted to share that analysis that I formed with you. My name is Victor. I have an MBA and a lot of business experience, and I like to analyze companies and then share that analysis on YouTube. Do me a big favor and like my video and subscribe to my channel. That'd really help me out. Now, let me tell you more about Tesla and my process to value this company. I follow a consistent process when I invest in a stock, and I've asked myself 4 questions. I answer those 4 questions, and then I make a decision whether I'm going to buy, hold, or sell. First question, do I want to be a part owner in the company? Do I like this business? Do I want to be part of the industry? Second, is the company operated well by the management team? Is debt under control and less than 3 times EBITDA? And I want to discount the stock. That way I can see my hard-earned money go to work for me and go up in value over time. Based on the answers to those questions, I buy, hold, or sell a stock. So Tesla is a new company in an old industry. And I just have such admiration for Elon Musk and all the employees of Tesla. I think they've done something really special to come out with a company that produces fully electric cars in an old industry, cars that have great technology. It's just a great product, and it's great to see them succeed. So I really love the company. I think the culture, the results have been astounding. The industry, automotive industry, could be really tough. So I love the company, but the industry is not my top industry. I think that the competition that Tesla could face and is facing now, I think is going to be a blocker to their overall growth, because we are dealing with companies that are fairly well run and are going to really match up against Tesla in a lot of markets. So I love the company. The industry is okay, but it's not my favorite industry to invest in. Tesla announced their earnings a few weeks ago, and they really impressed the street. And first, their growth of revenues. They grew their revenues by 47%. If you compare the second quarter of 2023 compared to a second quarter of 2022, I think the compares will continue to get a little tougher, but it was just a very good beat. So it really looked good, and I think the stock really rallied. Also, the free cash flow has gone up. One thing that I have evaluated Tesla in the past, and one of the tough things about this industry is getting free cash flow out of this type of business is a little tougher. It's not like a Google that just, it does search, and based on that, the algorithms they have, they can just really generate high margins and a lot of cash. That's not the automotive industry. So they grew 62% their free cash flow, but it's still, relative to like big tech, Microsoft, Google, Meta, they just don't produce the kind of cash that those types of tech companies produce. Tesla's balance sheet is really strong. They have more cash than they have debt. So really they have net zero debt, and they produce a fair amount of EBITDA. So overall, they're in great shape when it comes to their balance sheet. Looking at their statement of cash flows, it's very good to see them grow their free cash flows. And this quarter, they rose their cash flows by 62%, which is a very good growth rate. But again, they ended up with $1 billion of free cash. And this is an 80 plus billion dollar business. So in a quarter, to just produce $1 billion in free cash, it's nowhere near what big tech or pharmaceutical companies or even oil companies produce. So that's one thing to keep an eye on, is how cash rich and how efficient will Tesla be in generating free cash flow. Based on my analysis, I believe that the Tesla stock is being sold at a premium of 47%. That comes from two different valuation methods that I use. First, I value the free cash flows, and then second, I value earnings per share. Starting with free cash flows, what I did is I took the trailing 12 months of free cash flow that the company's produced. They produced $7.1 billion of free cash flow. I'm going to be quite optimistic and say they're going to grow those free cash flows by 30% in years 2, 3, and 4. And after that, at a clip of 5%. That's a very optimistic expectation. A lot of things can go wrong and delay that kind of free cash generation, but I think they deserve it. They've been operating very well. All the cash flows after year 4, I expect they're going to produce $472 billion of free cash in the future. I'm going to discount the free cash flows of 8.5. That's a little higher than I would use for a Google or a Microsoft. Just manufacturing has so much more risk than technology. So many things can happen, for a manufacturer that can go wrong. So that's why I have a higher weighted average cost of capital for Tesla versus, let's say, an Apple. Now, based on that discount rate and the cash flows that are going to be produced into the future, all those cash flows in today's value equate to $349 billion of value in those cash flows. I add the cash that's on the balance sheet and I take away the debt to get to an equity value of $370 billion for the company. Their current market cap is $384 billion. So it has a 46% premium on the stock right now. Per share, the cash flows, my calculations say that each share really is valued at $116 per share, but right now shares are selling for $215 a share. Looking at earnings per share, this is the expected earnings per share for the current year, $3.44 per share. Now they're trading at a very high PE ratio of plus 60, and I'm not willing to go to 60. I'm willing to go to 36. I think that's similar to what Microsoft has. And manufacturers, again, it's just a tough business. If you look at Ford, it has a PE of 8. So if this is an automobile manufacturer, there's just no way I can make it higher than a Microsoft or a Google. So I'm going to make it 36. It's still a very optimistic number to put on Tesla. And based on those numbers and this calculation here, I get a value per share of $107 per share using the earnings per share method. But again, they're trading their stock at $215 per share. So there's a 50% premium when using the earnings per share method. I combine the two and I put more weight in free cash flows. I take 2/3 of the free cash flow, 1/3 of earnings per share method. And I get to that premium of 47% on Tesla stock. So let me revisit my scorecard for Tesla. Do I want to be part owner of the company? And is the industry an industry I'm willing to invest in? And it's a big yes on the company. Absolutely. I think this company is full of people that are geniuses. They're just great people. But the industry is not the best industry in the world, but I'm willing to invest in it. I just said a lot of great things about the people. Their management team is excellent. Debt is well below 3 times EBITDA, but there's no discount in stock. There's actually a pretty significant premium. So I would either be a holder of Tesla stock if I felt like I had shares and I was going to hold them for a long period of time. But the reality is I did own Tesla for a number of years and I sold my shares years ago. I think about 4 years ago was the last time I held Tesla. I probably left a lot of money on the table, but I did make money on the investment because I just thought so highly of the company and continue to think very highly of the company. I'm a big fan, but the numbers don't lie. I have to see that the company is going to have intrinsic value that is going to give me a higher likelihood of getting a good return on my hard-earned money that I'm investing in a stock. Looking at where the Tesla stock has been trading, it's really had a very volatile up and down 1 year. Back in 2022, the stock really went down significantly. It lost well over 100% of its value, and it really had a low point at the very end of 2022, at the beginning of 2023. And from there, it's had a really nice rise, 99% collectively, which includes about a 1 month downturn. I think they're down 20% if you look at the last month of trading. So it does have a lot of movement on the price. My valuation is $113 per share. So based on that valuation, there's only been one opportunity or a period of time when you could buy Tesla roughly at, a fair value based on the numbers that I'm seeing. So it's kind of a tough stock to get into. And again, a lot of people love the stock because frankly, they're just a really interesting company. Their leadership is really interesting and their products are really cool. But that's not an investment that, I think is going to be over the long haul good enough for my methods and doesn't follow my process. So I have to pass on Tesla, but I'll continue to look at it and keep track of it. So Tesla is one of the magnificent seven companies that are the biggest companies that are on the stock market and had this great rise in 2023. And it really measures up well against its peers in this magnificent seven list. It's up about 99%, and only Meta and Nvidia have performed better year to date. The others, Amazon has done really well. Google, Microsoft, Apple, they've done well too. But boy, Tesla's stock price has really gone up in 2023. So they really have outperformed most of their peers in the Magnificent Seven. So that's my video on Tesla. I hope you enjoyed it. My point of view is I love the company. I think they make great products and very innovative company. Just the industry is a tough one. And as I showed, the free cash flows that Tesla is generating, although they're best in their industry, it's just a tough industry to generate the kind of cash flows that a Microsoft, an Apple, a Google, a Meta produce. So therefore, that's why the valuation that I have is not matching their stock price. It's showing that their stock price is actually quite a bit higher than where I value the stock from an intrinsic value perspective. Again, I'll continue to be a fan of the company, love their products, and hopefully they continue to be successful in selling more electric cars. I hope you enjoyed the video. Do me a big favor and like my video and subscribe to my channel. I'd really appreciate that. With that, good luck investing in 2023.